That's more Samuel. I'm back on YouTube. I'm back on your screen yet again, guys. It has been a very quiet week in the markets. Previous week was a bit quiet. I mean, we do have the bit of conflict crisis in the Middle East. However, the forex market has been somewhat quiet. And that was due to the Juneteenth U.S. bank holiday, which I expect that you guys know about this. So now, in our recent video, I came on here to let you guys know exactly what I was looking at, especially the dollar. It, sorry guys, especially the dollar index, to let you guys know that this pair is literally about to collapse. Okay, so guys, let me explain this. So whenever there is a crisis like we have in the Middle East at the moment, what investors tend to, I mean, I'm just backing up what this technical analysis looks like. So what the investors tend to do is that they tend to move their money into safe haven assets, and those assets tend to be your gold, your silver, and all manner of other things. Yeah, so they want to hedge against the risk, and therefore, you know that if people take out money from an asset or from any commodity, the price will definitely collapse, because what tends to drive price is demand. All right, so when there is huge demand for a certain asset class or a certain commodity, the price rallies higher. That is, when the demand is greater than the supply, the price will actually rally higher, and then subsequently, if the supply is a lot more than the demand, the price will drop. And in this case here now, we have investors moving out their monies into safe haven assets like the gold and silver. So this is going to affect the dollar, obviously, because now, first of all, this the dollar index has actually broken below a key level, which was the $100 mark. So we've actually broken below there, and now things are starting to point really bearish. And then let me just look at the weekly time frame. So on the other hand, yeah, whenever there is a crisis like so, investors will move their money out of the dollar into safe haven assets. So do not be surprised to see gold hit 4,000 dollars an ounce, and then silver also rally into regions of about 50 or 48 dollars an ounce. All right, so now this how things look on the technical hand of things. So now on the technical side of things, this is exactly how things look for the dollar here. We do have a break below this blue bar like so, and quite frankly, things are pointing bearish. I do not even have any iota of that whatsoever that the dollar could be collapsing even into regions of about 94. I think my fourth level target for this guy will be somewhere around here, like so 94. They want to clear base here. We'll go space all the way to the downside. Yeah. Now additionally, on the monthly time frame, let me just double check something real quick, because we did have like an ascending trend line somewhere around here like so. So we have this one that got broken out of somewhere around here like so. So this was like a breakout retest. So we had like a first touch, second touch here, breakout, false breakout here, now breakout, retest, and then continuation here. All right, because if you scroll down to the weekly time frame or even the daily time frame, you can clearly see that the candlestick popped up, all right, in attempt to actually retest that, and it did so nicely, and then it actually fired all the way back down to the downside. So this is just about this trend line, so I just get this out of the way. Let me see if there's any other trend line that might actually pose a threat to our trades. I think so far so good. You can actually tell for a fact that I'm actually bearish on the dollar long term. This is the first touch, second touch, yes. So we may have a third touch somewhere around here like so, but we haven't had that yet. So there's still room to the downside, yes. So let's just go down to the daily time frame and then see how all things look. So from daily time frame here, we did have a supply level after a breakout like so. So this is what it looks like. So we had like a downtrend, and you guys know that one of the principles of a downtrend is that we must put in series of lower lows and lower highs. Yeah. So in this case, we'll put in a lower high from this other high like so, and then this is another lower high here. So this was where the break of structure happened, and then this was the supply level. So literally things actually look very bearish for the dollar going into next week. So if you plot your trend lines like so, you can see that if you bring your fips into the game like so, you can see that right from the swing high to swing low here, the market seems to have tested the 0.5 region and then ranged a bit, and then now it's not starting to point to the downside. So I will not be surprised to see the dollar collapse all the way to 94 price point. I won't be surprised to see the dollar collapse into a range of about 95 or 94 price point like so. So with that being said, I will not be surprised to see the dollar collapse nicely all the way to 94 or 95 price point like so. So what does this mean for the euro dollar and then the pound sterling? Obviously this means some bullish moves on the pound sterling and then also the dollar and then also the euro. All right, so let me just show you guys something real quick. hang in there. Let me just show you guys something real quick. So now onto the dollar, like so. So moving into next week for the dollar, what we need to see is very simple. The 4-hour time frame. For those of you guys who actually love to trade the dollar index, for the brokerage that allows you to trade dollar index. By the way, if there's no brokerage, you can find the link in the pinned comment, like so. Come and sign up using my recommended broker. All right. So now for a counter channel entry, like so, just allow the market pull back nicely to retest this channel, and then we should actually collapse from here, all things being equal. All right, so now moving into the euro dollar. So let's just see how things look on that, guys. So on the euro dollar here, we did have a pullback over the week. However, I did not exactly like the kind of pullback I got because I wasn't as interested in it. All right, I had other plans, I had other pairs I was actually looking at. So now the euro did actually pull back nicely. Okay, so and moving into next week, what we need to see is very it's simple. Allow the market break out of this trend line, like so. All right, so this is a flag pattern happening here nicely. So we had the first touch, second touch here. So allow the market break out of here. Once you see a decent breakout of this trend line, like so, guys, we have space to the upside. All right, we are the all right, so in a case like this where you don't really have a recent high for this guy, so your first level target should be somewhere around. So how you get your first level target is very simple. Come and look left wherever you see a supply level, because now since you're buying to the upside, this is a buy trade, yeah. So if you're buying and you need a take profit point rather, so for your take profit point should be somewhere around this supply level, like so. All right, so always target the next supply level, the most immediate supply level. I mean, all things being equal, we should see the euro rally into regions of about 1.21866 or 1.22, somewhere around there, like so. But for your immediate take profit, especially for those of you guys who are actually day traders, you should actually target regions of about 1.17097. That's just that about that for the euro. All things being equal, provided that this level remains intact. All right, so in the event that push comes to shove, and then we actually break below this level here, this will expose this level, like so, to start looking at buying opportunities from here. But I do very much favor the euro rallying all the way to the upside from this 1.1522 region, like so. So we could easily see the guy continue higher. So our first level target will be 1.17097, and then once we clear that height, we got space all the way to the blue bar, which is around 1.22000, like so. So that's just that for the euro. But if you found value in this video so far, I urge you to go ahead and subscribe to the channel, turn on the bell icon as you do so. And guys, check out the pinned comments. You see the link to the mentorship program literally next to nothing. Come and learn how we actually call these trades out and analyze the market like a pro, so you too can make money. Guys, we are halfway through the year. There is still time. All right, you also have done this earlier on, but there is still time. This is still the second quarter. You have time to catch up and then learn and unlearn all the mistakes. And then, guys, I've gone ahead to shrink your learning curve from what was supposed to take you like 1 year 6 months, all right, to learn. I've gone ahead to shrink it in such a way that you get to learn every single thing you need to do in 2 weeks, and then move on to practicalize. You get me? So you still have enough time in the year to catch up and then even become profitable. Guys, you have 90 days. I always advise that you take 90 days to learn any particular skill. Guys, 90 days is 3 months. 3 months, we have 6 months to the end of the year. You can still end the year with that goal of yours, which is to make $1,000, $10,000, $100,000, whatever goal you've set for yourself. It is still attainable because we are just halfway through the year. You get me? So guys, once again, guys, it's going for a discount, so make sure they check the pin comment and then help yourself as well. All right, so that's just that for the euro dollar. So let's move on to the pound sterling, like so. So pound sterling also has a very juicy opportunity. So going into next week, what we should be expecting on the pound sterling is very simple. Yeah, very simple. On the daily time frame, we did have a very decent pullback. Okay, let me just check if it's charging. Okay, so on the daily time frame, we did have a very beautiful pullback, like so. Let me just expand this guy nicely. Just hold on, guys. Okay, so on the daily time frame for the pound, this is exactly how things look. Okay, so we had that first flat pattern here that we had like a decent breakout, like so, to the upside, and now this is exactly how things look. We did have a very strong demand level somewhere around here, like so, and then the market gave us liquidity zones, and there's some liquidity, and now it is trying to find its balance at this point. So what you should be looking out for is very simple. If this level should hold, guys, we should definitely see the pound rally into recent highs first, and then subsequently we should see this guy rally all the way to 1.42060. Guys, I have no iota of that whatsoever that provided that the person remains at that level, we would definitely be seeing this guy rally higher. So what you should be looking out for in the coming week is very simple. Allow the market break out of this counter channel like so. Okay, give it a counter channel, allow it break out like so. So once you see a decent breakout, because we could even see this guy dip even lower and then come into regions of about this channel like so, it is possible. But in the event that we do actually sustain above this level like so, you should actually see this guy continue higher. So your entry point will be a counter trend line break on the 4 hour time frame like so. Once you see a decent counter trend line break like so, guys, execute this trade and then go ahead and then make money for yourself. So stop losses should come below structure if you're what is this. So if you're going long on this player, stop losses should come below structure like so, and then also target this high as a first CP. Right? So to actually go deeper, so let's talk about the dollar card. So this one has my interest. I'm very pretty much interested in what the dollar card does long term, because guys, I've been calling out this pair to the downside for a while now, and the market seems to have come into a very decent level, which is very beautiful. Like if you check the daily time frame, like so, let me show you guys what the daily time frame looks like. So on the daily time frame, we do have a descending trend line like so. So this was like the first touch, second touch, third touch. This is the fourth touch here. So ideally, what should happen here? Get rid of all these lines, guys. I hate seeing lines on my chart. So ideally, what should happen on the dollar card is very simple. Should this level hold, we should see this guy rotate all the way back down. You get me? So I'm still watching this guy closely. So in the coming weeks, what we should do is very simple, because you see, guys, it's one thing knowing what the market wants to do, and it's a different thing entirely making money from it. A lot of people know how to call out trades and analyze and do all sorts of things, but at the end of the day, they don't know the right time to enter the trades. Yeah. So because you see the market at a level does not necessarily mean that the market is ready to move. Sometimes it needs to rest. Allow the market give you some entry criteria. All right, because most of you guys watching this don't even have an entry criteria for your analysis. So allow the market come in and then give you an entry criteria. Let it fulfill that criteria of yours, like a counter trailer break or a 4 hour bounce. What do you use? Any strategy you use at all? Just allow the market, give you that hint that it is about to move. Then that's when you actually lock in and then enter the trade. You get me? So all things being equal here, I do have a Fibonacci play like so. If I'm not mistaken, this is a high, this is a low, recent high like so. So from swing high to swing low here, this is a very beautiful Fib setup like so. So the market is literally trading at around the 0.618 region like so. So what we need to see in the coming weeks is very simple. Counter trend break like so. So allow this market come and break out of this counter trend here. So a 4 hour candle break below this counter channel like so is your entry confirmation. Yeah, so once you enter here like so, please please put your stops above structure. I'm not a big fan of guys putting structures, putting stop losses inside of here. It's recipe for disaster, guys. I kid you not. Trust me, I've been doing this for well over 3 years now. I know when the market is gonna stop you out. You do not put your stop loss on the structure itself. Put it above structure if you're selling. Yeah. So selling or buying, it must come above structure. You get me? So in this case, structure is here. So once you see a 4 hour candle break below this channel, like so, entry should be here and then stops above structure. Your first TP must always come at the recent low, which is around 1.35484. The once you clear that base, you got space all the way to 1.34501. And by the way, guys, if you found value in this video so far, I urge you to go ahead and subscribe to the channel and then turn on the bell icon as you do so. And then also on USD CHF also has a similar structure to that of the USD card. I see no reason as to why all of this pair should not melt in the coming week. All right, so USD JPY on the other hand, guys, we have beautiful trade setups on the USD JPY. I'm actually I had a bearish stand on the yen pairs earlier on, but now things are starting to shift to the bullish side of things. As I always say, guys, these things happen whenever you have crisis. Like so, the market tends to shift, because traders and investors tend to move their money around. So this is just what's happening in the market. So long story short here, on the USD JPY, we do happen to be putting in some series of high highs and higher lows. From daily time frame, the market seems to be giving us an ascending low here. Never really came into putting an equal low here. So I will not be surprised to see the USD JPY rally into regions of about 148.594. All right, because we have actually broken structure to the upside now. So how do you capitalize on this whole thing? It's very simple. Come on the 4 hour time frame and look for the most recent break of structure and then a pullback like so. So this is what it looks like. So on this level like so, you need to see the market pull back into 145. All right, so a pullback into 145 point 208 should actually give you an entry point. All right, so once you enter your TP actually should be around 148.594. That's just that for the dollar yen. All right, so that's just that Let me check any other pair that I see has potential. So for gold, guys, I've been watching gold closely, waiting for this guy, and it just gave us a bullish engulfing for our candle. This is huge, all right. So whenever you're in a trend and then you see this kind of thing after I put back, like, so be ready, guys, because the market seems to be ready to blow out to the upside. So what we need to see is very simple. Again, on the 4 hour time frame, we need to see a counter trend line break, like so. So now in this case, where you have a very steep we have a very steep kind of pullback. What you should do is come on this most recent high here, and then plot your counter trend line from there. That is where your trend should start from, right? Because you want to look to connect at least 3 turning points in the market. So once you see a decent 4 hour kind of break above here, like so, I know people who are already long on this pair. I mean, it makes a lot of sense to go long on this pair already, because I see no reason as to why it should not play out from swing low to swing high. This is where the market is came into demand levels at 9.618. So this is very good for buys. But for those of you guys who are a bit more conservative, I would actually advise you allow the market break out of the counter channel. Like so, once you clear base, we got space all the way to recent high, which was around 3448.578, if I'm not mistaken. Let me just check something real quick. All right, so once we clear that space, guys, we have space all the way to $4,000 per ounce for gold. I have no iota of that whatsoever. That would definitely rally into $4,000 per ounce for gold. And let me check if there's any other pair. The indices are still quite so if the US gets involved in the war, this is definitely gonna affect your indices, yeah. Because anything that makes the US get involved in any crisis, the stock market tends to suffer mid-term, but long-term it always bounces back. All right, long-term it always bounces back. So US 30 still bullish on these pairs. All right. So for those of you guys who haven't had any decent entry chance, this is your entry opportunity. Counter trend break on the 4 hour time frame, like so. For the US 30, guys, we still have our trades locked in. So once we clear this 4 hour candlestick, like so, guys, we got space all the way to 45,000 basis points. So with the whole Middle East tension, it's causing a lot of uncertainties in the market. All right. So you just need to trade safe, be safe, and then apply proper risk management and at every single point in your trading. All right. So long story short, okay, that one is gone actually. So yep, so that's just that. And for silver I still expect silver to rally into $48 an ounce. I have no reason as to why I should doubt silver bullishness. In the event that we do actually pull in deeper, I'm waiting to lock in this guy at around $34 an ounce, and then I'll take this guy all the way to $48 an ounce for silver. All right, so that's just that for that. I believe that this video has been helpful. And be sure to leave a like and comment, guys. Let me know what you think in the comments. YouTube always sends me each and every one of your comments. All right, once again, guys, I remain Desmond Samuel, yours truly. And guys, trade safe, be safe, apply proper risk management. And guys, check out the pinned comment, guys. I have the link to the mentorship program. It's literally next to nothing, guys. It will save you a lot of stress, guys. Come and learn how to trade properly. Okay, the strategy works for your prop firms. It works for every single thing you're handling. Day trader, swing trader, whatever trader you are. Come and learn the right way to do things. All right, so that's my time, guys. I'll catch you guys next time. Once again, be safe, trade safe, and be wise, and peace out.